Hey, what's going on, everyone? Today, I want to talk about liquidity gaps and traps. Now, there's actually very easy tools to be able to see liquidity. During strong liquidity events, you can see things like liquidation candles, liquidation wicks, where the price goes substantially lower. It depends on the situation. And all this information is important because we can actually better predict and analyze what type of moves we might see and the extremes of certain moves. Okay, so one of the tools here that I like to use is on CoinGlass. There is the BTC liquidation heat map. Okay, so this actually shows you here, for example, in the last 24 hours on perpetual futures, what we might be looking at on major exchanges in terms of liquidity. And when we're talking about liquidity, right, we also know that in crypto there's heavy leverage. So this really helps us spot areas where we might see resistance, might see support. Also, how to spot areas where we may see a massive liquidity event like a move lower with an extreme wick, so an extreme downside movement, or somewhere where we might see a breakout. This is all very important, and this is where we need to spot some of the gaps and traps in liquidity. So just a quick definition of liquidity: it measures how easily crypto can be bought and sold without impacting price. And higher liquidity usually signifies a stable market where large transactions execute quickly at predictable prices. Contrary to what a lot of people think, when we see, these type of moves that I was talking about before, now at the bottom of it, you might have liquidity, but before that, you're probably going to have a liquidity gap. So a little bit of lower liquidity where the price is very quickly going to shoot downward to reach that area with higher liquidity where we might find support. So, this indicates the market depth, the amount of price stability that we may have, the volume, right? All of these things liquidity helps us analyze. And of course, we can better predict the market reactions, right? So this is very important in noticing those market shifts. Let's talk a little bit about the three main use cases when dealing with liquidity and liquidity tools like on CoinGlass, right, with the liquidation heat map for crypto trading specifically. So one of the most important things in this video that I want to share is something known as the magnet zone. Okay, this is going to be an area, I actually wrote it here on a past example, where this was back when we were trading around $50,000, right? We had already been in an uptrend. We had major support at this level over here, right? So let me just zoom in so you can see the picture a little bit better. Right below 48K, we had very strong support, right? Very unlikely that we were going to fall below that. However, we were already in an uptrend. And if you see these patches of higher liquidity above, right, like we had here at 50,500 to 51K, right, we have this interesting and attractive liquidity above. And if we actually look back, right, we also had this before, and what happened? We always moved higher to reach those liquidity levels, okay? So this was actually acting as a magnet zone to attract the price, and so that the price can gravitate higher to scoop up that liquidity. Now, in areas where there's massive liquidity, like over here, this is actually going to be a little bit different, where this is going to be your support zone. Okay, so in the case here where we're moving higher, this area below 48K is a clear support level. So this type of area with substantial liquidity allows traders or whales to execute large trades, right, at favorable prices. And this could cause price reversals, right, depending on the situation, typically with resistance. But in a situation like this where we're already up trading, this is really going to act as major support, right, if we even go and test this level. But remember where the magnet zone was. There was no sign of us really seeing heavy liquidity lower, right? So no sign that we would necessarily get a drop here on top of the fact that we're uptrending. However, on the upside, we did have a magnet zone, okay, right here. And you see that before we always reach those magnet zones, and this time was no different. And of course, if you know what happened next, we reached 75K. So let's just review the definition of a magnet zone, and then we're going to try and find some of this stuff on an actual live example. It's a high concentration of potential liquidation levels within a certain price range, which suggests that the price might gravitate towards that zone. Traders often use these levels to predict price direction and enhance indicator convergence, right? So don't just look at the magnet zone, but of course put two and two together. Okay, we're already uptrending. We already cleared previous magnet zones. We have a new one coming up. Very likely that we're going to head there next. So let's go ahead and look at some live examples, okay? Looking here in the last 24 hours, you can compare it with the chart to see what's happening. But here, unlike the chart where we just have, our lines and our candlesticks, here we see the deeper layers of the market, okay? We actually get to see where liquidity is, okay? Where there might be liquidations, etc. So for example, right here, we have a huge amount of liquidity right below the 65K level. A lot of people might see this and think, oh, well, this is a magnet zone. No, this is a very clear resistance zone, okay? So it's actually gonna be quite hard right now for us to get above this level of 64,890. However, this is where you need to start learning how to read liquidity, okay? If we did manage to break past this level of 65K, then we start to see heavier liquidity open up, which is achievable. So when it's deep yellow like this is mostly going to be resistance or lower over here support. So we can see that we're in a little bit of a range here, and that's actually accurate to how we've been trading. But if we do manage to break above 65K, we will unlock some of that liquidity, very similar to the zone up here, where we're actually going to see the price gravitate towards this magnet zone all the way up to initially 65,500. Right? And then it'll probably create enough momentum to cause a breakout higher. Right now in the current time, I'm seeing a few things. I'm seeing that we have two big support zones here around this 63K level. So we know that we have support here. However, leading up to the 63K level, it does seem like there's some liquidity that wants to be grabbed. So I'd be more inclined to say that the price is likely to dip lower here towards the 63,350, maybe even a little bit lower, 63,105, and probably just test 63K again. At that point, we'd have to see, are we going to get a bounce? Probably yes, seeing that there's quite a bit of support here. So we'll probably bounce back into the range. But first, we're going to go test this level lower here around 63K, 63K 100, and then move back up into the range. However, if down the line we do get above 65,000, that will unlock a nice breakout here above that. So this is how you should be reading this in the short term. This is the last 24 hours, right? You can always extend this to different time frames. If we look at the 1 week chart, right, you're going to get more details on what's been happening because bigger time frame. So here we can see, is what I said correct, or are we seeing something different? Well, we still have this heavy amount of support around 63K. Also have a decent amount of support here, even at 63,500. Right now, we don't have enough liquidity above to necessarily force a move higher with something like a magnet zone, right? But if once we clear this liquidity a little bit lower, right, and start moving back up into the range, if we're able to get above 65,000, you see that over here, we have an interesting amount of liquidity. But first, we would have to get above 65,000 as per the shorter time frame, 24 hours. But if we manage to do that, the price will very quickly probably gravitate towards the next big resistance level of $67,400. So this is just an example of how you should be reading this. I encourage you to practice this as well. Okay. Another thing that we'll want to pay attention to when looking at these liquidity levels, liquidation levels, is price pressure. Okay. These are levels that can create significant buying or selling pressure, leading to natural price reversals as the market responds to these imbalances. So this is exactly what I was talking about, where if we break above $65,000, okay, we know that we have a magnet zone a little bit higher, right, up another 500 points. But if we look at the weekly chart, we see that we actually have a bit of a gap here that will need to be filled from the 65K level, right? There's a lot of liquidity above, so we're probably going to go and jump this gap, reach these liquidity levels before finding the next support. So we actually have a nice example here where the price will very quickly reverse to the upside if we break that 65K level. A continuation of the breakout is likely. I don't want to go into too much detail. There's a lot more to talk about with these liquidity levels. If you want to learn more, please consider joining the Mastermind Trade Club Telegram group, where you can get more trading insights from me and our community. Make sure to like and subscribe, and I'll be seeing you very soon. Thanks for watching.